Hello students. Now it's a special video for first year PUC students, that is tips, where I was keep on stressing upon it in my previous videos, that I am going to get you few tips chapter wise. In that, few chapters are very important. Then in that, how to remember the points, it becomes easy for you, right? So I am going to get you now the tips. Before I start with tips, I request those who have not subscribed for this channel, kindly subscribe for this channel and share among your friends. Thank you. Let us start. Tips for first year PC students in the subject accountancy chapter wise. I have given you one important thing, how to score out of out. First, read the question paper completely for the first 10 minutes and select the problem which you can do it confidently. And any problem is tough, do not scratch your head for that and do not waste your time. This is what happens in the examination. Always we think of the tough problems, always forget about the problems which you can do it. You first take it and start doing it. Automatically you will be able to solve the tough problem also with ease. Right? So now let us start one by one. Now chapter wise tips. Number one, journal. Please write proper journal column when writing journal entries, that is date, particulars, ledger folio, debit and credit columns, and put the grand total at the end of the journal without fail. So you should remember always this format. The format will have what actually marks. So write it in the format and without fail write the narration. Write the narration. Right? That is about first chapter. Then the second chapter, subsidiary books. In subsidiary book, that is preparing purchases book, sales book, purchase returns book, sales returns book, one must be careful with the transaction given. If any transaction is given, that should not be taken, cash transaction is given, that should not be taken for the above books, because it is all credit transactions. If any cash transaction is given, that should not be taken. For that I have given an example: purchase goods for cash, sold goods for cash, purchase goods from Harish for cash. No, these are all cash transactions which will not appear under your regular subsidiary books, which appears under what actually cash book. So don't write that one in your subsidiary books. But you have one more typical transaction: sold old newspaper to Suresh, which will not appear in the above subsidiary books but appears in journal proper. Assuming that if one transaction is given sold old newspaper, always when the name sold is there, then you will think that either it should appear in sales book or appear in what actually purchase book. No, you should be aware, because sold old newspaper, it is not goods, it is old newspaper, that will appear in what actually journal proper. Here I am going to get you one more concept, the where I have already explained you in my previous videos. Just I am going to repeat. Say what question they have asked you, please be what you call read it properly. Prepare relevant what you call subsidiary books, then you will have to prepare journal proper also. Prepare subsidiary books, purchases book, sales book, purchase returns books, then it is right, you prepare only those books. If any extra transaction, you just leave it. But extra transaction is there, but if they have asked relevant what actually subsidiary books, then you have to prepare what actually journal proper also, where I have given in my previous video. Now next one, while preparing two column cash book, you should be careful with what actually contra entries. There are only two entries for contra entries usually: cash paid into bank, bank account debtor to cash account, cash withdrawn from bank for office use, cash account debtor to bank account. These are the two entries usually we find what actually in the contra entry. But here you must be careful. When post-dated check has been received from the customer, it should be first treated as cash, Then on the date of realization, it will get deposited to bank, and that becomes a contra entry. For that, I have given you example. 15/1/2021, check received from customer for rupees 10,000 and deposited the check on 20th/1/2021. Received on 15/1 but deposited on 20th/1. In such a case, on 15/1/2021, entry is cash account data to customer account or debtors account, whatever it is. On 20th/1/2021, bank account debtor to cash account. Bank account debtor to cash account. Now it becomes contra entry because in the first instance it has been treated as cash, then it has been deposited into a bank. So this type of transaction you should remember in 2-column cash book. Next, bank reconciliation statement. Say I have given you one wonderful chart for that. Before that I have given you the a note. The arrow showing upwards indicates add. The arrow showing downwards, it indicates less. Here you say it is upward, add. Here you say downward, it is less. So this is very important, where I have shown you in my what you call previous videos while working out problems. So difference between cash book balance and passbook balance, that is called as what do you mean by your bank reconciliation statement. So here passbook balance, it is called as what you mean regular balance. What is regular balance? Regular balance is where we have our amount in the bank, which is called as what actually regular balance. Now let us start one by one. I have made it a color Xerox so that it becomes easy for you people. You see, we are coming from regular. See, this is regular balance. This is regular balance. Regular balance. Cash book to passbook. I have given you passbook to cash book. Why? What they are going to ask, we do not know. So for that sake, I have given you cash book to passbook, passbook to cash book. It becomes exactly opposite. I have given you a few transactions which appears regularly. Check issued but not presented for payment. Cash book is showing less, but passbook is showing more. So arrow is showing upward, it is add. But here it becomes when passbook to cash book, it is more, it is less, then it becomes what actually less. So it is very simple. It will interchange. It will interchange. So whatever that you are going to read, if you remember this, it is opposite on the other side, that is passbook to what actually cash book. So I have shown you so that it becomes clear for you. So I will explain the only one part. So other part you will be able to read and recollect on your own. Check deposited but not collected and credited. Cash book balance is showing more, passbook balance is less. When we deposit, we think that bank balance has increased, but in the passbook it is not, so it is less. So here when it is less, on the other way it becomes what I say add. Direct payment made by the customer to bank. When he has made direct payment, in the passbook balance increases, whereas cash book balance is showing less. Once again add, but on the other way it is less. Then interest credited to passbook. Very simple. Cash book balance is showing less, but passbook balance showing more, add, but here it is less. Then bank charges debited in the passbook. Cash book balance is showing more, passbook balance showing is less. So I am showing you less means here arrow mark down it is less, arrow mark up is add. Amount deducted in the passbook as per standing instructions. Assuming that you have given standing instruction to the bank to pay my insurance premium, right? Or every month transfer rupees 10,000 to Mr. X. When standing instruction has been given, then it does. When it going to pay, then naturally in the passbook amount will be reduced. But cash book it is showing more. Cash book balance is showing more, passbook balance showing less. It is less. Then wrong credit in the passbook. Somebody amount has been credited in my passbook. So passbook balance showing more, but cash book balance showing less. So it is less, it is more, it is add. Then wrong debit in the passbook. It is opposite. Wrong credit, wrong debit. Wrong debit means instead of debiting somebody's account, they have debited my account. So passbook balance showing less, but cash book balance showing more, it is less. So it is exactly opposite for what actually from passbook balance to cash book, right? Now in the similar fashion, when overdraft balance is there, when overdraft balance is there? Very simple. Overdraft means what? Overdrawing in your account. Assuming you have 10,000 rupees, what actually in your account, you will issue a check for 20,000. The bank will pass that check because you have a overdraft facility of about 50,000. That means you have, even though you have 10,000 rupees, where you will be you will be given a chance that your check will be passed. Then that is called as overdrawing in your account is called as overdraft. So here also I have given you cash book balance to passbook balance to cash book balance. So whatever here it happens, it is on the opposite side, it becomes other way. If it is here less, it becomes directly add. So if you learn this, then automatically it becomes. So what I am telling you though, in the regular balance, you learn cash book to passbook. Then you can do passbook to cash book. Then if you learn in overdraft cash book to passbook, you can do passbook to cash book. It is very easy. Check issued but not presented for payment. When you issue a check in the overdraft, that means you think that you have to pay more to the bank, but it has not presented. Passbook balance is showing less, then it is what actually less. On the other way, it becomes actually add. Then check deposited but not yet collected and credited. Very simple. I thought that my overdraft balance has come down, whereas in the passbook it is showing more, add, but the other way it is what actually less. Direct payment made by the customer to bank. So cash book balance is showing what actually more, and passbook balance is showing what actually less, because he has made direct payment. Naturally my overdraft balance has reduced. Interest credited passbook. So when interest has been given, then passbook balance is showing, that is overdraft balance is showing less, but whereas cash book is showing more, less, but here it is add. Bank charges debited in the passbook. Cash book balance is showing what actually less, that I have to pay less, but passbook is showing more, add, but on the other way it is less. Amount deducted in the passbook as per standing instructions. So cash book balance is showing less, but less means what? My overdraft balance is less, but passbook says that your overdraft balance is more. That means you have to add. Then wrong credit in the passbook. When wrong credit given, naturally my overdraft balance what happens comes down. But in cash book it is showing more, but passbook balance is showing less. Here it is less, here it becomes add. Wrong debit in the passbook. Cash book balance is showing less, but passbook balance is showing more. So add, here it is add, here it is less. So if you can remember this particular statement, it becomes very easy. In the similar fashion, you can learn in cost accounting also the same type of financial books and cost book, where you are going to write the reconciliation statement. Then you can use this method there also, even in your degree. Now I have given you most important trial balance. Now the next topic is trial balance, most important. This is for your lifetime, if I am correct. Say, don't think that trial balance is only for the first PUC. No, it is lifetime. Always you should remember first PUC accounts well, then you can learn any accounts very easily. Easy tips to remember how to prepare trial balance. All assets show debit balance. All liabilities show credit balance. All purchases, that is goods and expenses, show debit balance. All sales, that is goods and revenues, show what actually? Credit balance. Capital usually shows credit balance. 99.99% credit balance. Only sometimes when you have drawn more than what you have invested, then sometimes it shows capital debit balance. Otherwise always capital shows what actually? Credit balance. Drawings always shows debit balance. Sales returns, which is also called as returns inwards, I have mentioned return inwards, always shows debit balance. Purchase returns, that is return outwards, always shows credit balance. Outstanding liability always shows credit balance. You might have seen in the adjustment, salary outstanding, rent outstanding, wages outstanding, which is called as outstanding liabilities, always shows credit balance. Prepaid expenses always shows debit balance. What is prepaid? You have paid in advance. Example, insurance premium paid in advance. You are supposed to pay till only 31st of March 2022, where you have paid even for April, May, June of 2022. That is called as prepaid. That means you are paid in advance. That is prepaid expenses always shows debit balance. Carriage inwards, carriage outwards always shows debit balance. You should not confuse the sales returns and what you call purchase returns or return inwards and return outwards. It is a different item. Carriage inwards and carriage outwards always shows debit balance because both they are expenses only. Both they are expenses only. One is on purchases, the other one is on sales. That is carriage inwards is on purchases, carriage outwards is on sales. All expenses or losses show debit balance. All incomes and gains show credit balance. So if you remember all these items, then you can easily prepare trial balance for 6 marks in your examination. Next is very easy. Just I will show that rectification of errors. Say you have to remember always 3 types of errors. Errors of commission, errors of omission, errors of principal. Examples of errors of commission. Sales book was overcast by 1000. What is overcast? 1 plus 1 is 2. You made it as 3. That is called as overcast. Or 1 plus 1 is 2. You will make it as 1, which is called as undercast. So overcast or undercast or cash paid to X on account rupees 2000 was posted to X account rupees 200. That means you have left 1 0. Then such errors are called as errors of commission. Errors of commission. Then examples of errors of omission. Errors of this is commission. That means 1 plus 1 is 3, you will call it as, or 1 plus 1 is 1, you will call it as, or 2000 has become 200. That is commission. Omission means you are going to omit. Credit sales of to Mr. M 2000 was not entered in the sales book. So it has entered in M book, but it has not been entered in what actually sales book, which is called as errors of omission. Then rent paid rupees 2000 was not posted to rent account. Say you have paid rent, but in the rent account it was not posted. That is called as errors of omission. Next, examples on errors of principal. Errors of principal means that means you are going wrong with what actually your principal. You are supposed to follow rules and regulations. In that, credit purchase of machinery for rupees 10,000 is recorded in the purchase book instead of journal proper. Actually, you have purchased machinery. You have not purchased what actually the goods. You are supposed to write it in journal proper. You are not supposed to write in what actually purchases book. That is concept, right? Then that is called as errors of principal. That means instead of one book, you have written in the other book. Then rent paid to landlord rupees 7,000 is recorded in the cash book as payment to landlord. See, it is not payment to landlord. Even though payment has been made to landlord, for what purpose you have paid to landlord? That is rent. That means you should have written it as rent, but you have posted it what actually landlord. That is errors of principal. So errors of commission, errors of omission, errors of principal. Then suspense account. What is suspense account? When you get some difference in trial balance, you will place it to suspense account, then you will find it out later on. Usually for 2 marks, they will ask what is suspense account. Suspense account is created when there is a difference in trial balance. That means we'll say that before preparing trial balance, after preparing trial balance, or before putting to suspense account or after putting it to suspense. But you are supposed to find out what is that suspense. It is just like after seeing the movie, suspense movie, you should know that what is the suspense at least at the end of the movie, while getting out of the movie. You can't say even after coming out of the movie, you did not understand suspense, there is no meaning. Likewise, you have posted, but you have to find out what is that. That means where it has been posted wrong. Whether it is errors of commission, errors of omission, errors of omission, errors of commission, errors of principal, you will find out. Then that is called as what actually suspense account. Next, depreciation chapter. Nothing is there. Just I want to say, depreciation is a permanent, continuous and gradual shrinkage in the book value of fixed assets due to usage, passage of time or obsolescence. Right? Always, whatever you take, even if you take a best scooter, if you don't visit, then it becomes obsolescence. That means the value of the scooter will reduce because of passage of time, right? That is depreciation, decreasing in the value of asset due to wear and tear. Types of depreciation, that is straight line method, fixed install method, or original cost method. All are one and the same. All are one and the same. Straight line, fixed, or original cost. Then written down value method, diminishing balance method, or reducing balance method. Here also there are three names: written down value method, diminishing value method, or reducing balance method. Then third one, annuity method. So there are three types. Usually they will ask 2 marks. What is mention the types of depreciation, 2 methods of depreciation. Under straight line method, depreciation is fixed because it is being calculated on original cost of the fixed asset every year. It is calculated always on the original cost. So that means, assuming you have an asset of 80,000, 10% depreciation means 10% of 80,000, 8,000. Every year it is how much? 8,000. That is called as straight line method or fixed installment or original cost. Whereas under written down value method, depreciation is being calculated on the opening balance of the fixed asset every year. Assuming 80,000 is the purchase value, 10% you have deducted depreciation, then it becomes how much? 80,000. Then 8,000 first year depreciation you will calculate, then it becomes how much? 72,000. Next year this becomes the opening balance, again you will calculate on 7,200. Then it becomes what? Second year depreciation. That means next again it keeps on what? Changing. You are going to calculate on the opening balance. Such a type of depreciation is called as written down value method or reducing balance method or diminishing balance method. It is most popular method of and correct method of finding out depreciation. Next, bills of exchange. Under bills of exchange, the written order for payment issued by the seller to the buyer is called a bills of exchange, or according to section 5 of the Indian Negotiable Instrument Act 1881, bill of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. So why you are in need of all these bills of exchange? When you sell your goods on credit basis, you will give 3 months time, 4 months time, 5 months time, 6 months time. But very next day you may not be able to ask the person actually to get me the money because you have sold it on credit basis. In such a case, what we will do, we will draw a bill. When you draw a bill, then that person in that bill will say that you have purchased goods worth rupees 1 lakh, right, which is payable after 6 months, right? It is right. So he says that yes, I have accepted. Then that acceptance which has been given by the person, the purchaser, and the drawn by the seller is called as bill of exchange. Why you have to draw? It is very simple. Once he signs for that, then that bill where I am going to discount with my banker. I am going to discount with my banker. That means assuming it is 1 lakh, the banker will take what you call 500 rupees as commission, right, discount amount. Then he is going to get me 99,500 rupees. That means after 6 months I am going to get 1 lakh, where I am going to get today only, that is 99,500 rupees. Immediately the value of money is more than such a thing which can be done, which is called as bills of exchange, That is called as negotiable instrument. So in that it is called as bills of exchange as well as promissory note. Then parties of bills of exchange: drawer, drawee, payee. Drawer is a person who is a seller who draws the bill is drawer. The person who purchased the goods, he accepts the bill is drawee. The person who is going to what actually discount, that is called as banker, is going to payee. Sometimes if he is not going to discount, drawee and payee will become one and the same. So this is regarding what do you mean by bills of exchange. And most important concept is financial statements, trading account, profit and loss account, and balance sheet. We have already done this one in our regular accounts, but still I am going to get you the details of that. Note I have given TRDR means trading account debit side, TRCR means trading account credit side, PLDR means profit and loss account debit side, PLCR means profit and loss account credit side. A, asset side of the balance sheet. L, liability side of the balance sheet. TRDR minus trading account debit side deduct. TRCR minus trading account credit side deduct. TRDR plus trading account debit side add. PLDR minus profit loss account debit side minus. So these symbols, if you can remember, then you will come to know the why we should get it. You have given a PLCR minus means profit and loss account credit side deduct. PLDR plus means profit and loss account debit side add. PLCR plus means profit and loss account credit side add. So this signs that I have shown you, it is very easy if you follow those signs in while preparing final accounts. Now, what are the items that you are going to get usually in your final accounts? I have written many items. You just see stock, TRDR, purchases, TRDR, purchase returns are written in outwards, TRDR minus, wages, TRDR, carriage inwards, TRDR, freight charges, TRDR, power, TRDR, sales, TRCR. Sales returns are written inwards, TRCR minus, salaries, PLDR, rent, PLDR, commission, PLDR, commission received, PLCR, discount. If I say only discount, it is always discount allowed. It is always discount allowed. So you must be very careful. If say only discount, it is always allowed, PLDR. Then discount received, PLCR. Next, bad debts, PLDR, postage and telegrams, PLDR, printing and stationery, PLDR. I hope now you understood why I have written like this. PLDR means profit and loss account debit side, profit account credit side, trading account debit. That's why I have given the note first earlier only. Advertisement charges, PLDR, audit fees, PLDR, legal expenses, PLDR, bank charges, PLDR, repairs, PLDR, carriage outwards, PLDR, traveling expenses, PLDR, telephone charges, PLDR, general charges, PLDR, interest paid, PLDR, interest received, PLCR, interest on capital, PLDR, rent received, PLCR. I have covered almost all the items. Bad debts recovered, PLCR. Then balance sheet items, capital, liability, loan, you have taken loan, liability, sundry creditors, liability, bills payable, liability, bank overdraft, liability, outstanding expenses, liability, any income received in advance, liability, land and building, asset, plant and machinery, asset, furniture, asset, motor car, asset, loose tools, asset, goodwill, asset. As per accounting standard 26, you are not supposed to show goodwill in the books. That's why I have made a mark on it, I have blocked it, right? But it is an asset. Investment, asset. Closing stock, asset. Sundry debtors, asset. Bills receivable, asset. Cash at bank or bank balance, it is one and the same. Cash at bank or bank balance, asset. Cash in hand, asset. Prepaid expense, asset. Outstanding income, asset. Then how to treat adjustments in final statements. Every adjustment should have double effect, once in trading account or profit loss account and again in balance sheet. So for that I have given you about so many 5-6 adjustment, usual adjustments that what you are going to get in your PUC level. Always you say that closing stock, trading account credit side and asset side of the balance sheet. Depreciation on asset, profit loss account debit and from that particular asset minus. Example, depreciation on furniture. Depreciation furniture will be first taken under profit loss account debit side and again in the asset side furniture minus depreciation. That is why I say A minus. Appreciation asset, the same thing. Depreciation opposite is appreciation, PLCR, then A plus. That means the value of asset has increased. Outstanding salary, rent, Any other expenses, say anything outstanding, assuming salary outstanding, rent is outstanding, wages is outstanding, that is called as PLDR, and again it is what actually liability. Prepaid insurance and other expenses, say any expenses that you are going to pay in advance, then it does not belong to this year, that belongs to next year, that is called as PLDR minus, then again asset side, right? Bad debts written off, PLDR plus asset minus, from which asset? Debtors, because bad debts it happens only on account of debtors, that is credit sales. Provision for doubtful debts, which is popularly known as PDD, profit and account, what actually debit side, and asset minus, right? Next, interest received in advance, PLCR minus, then liability. You cannot receive any income in advance, right? Discount on debtors, discount is different, doubtful debt is different. Discount means you are giving discount for your debtors, right? So PLDR plus asset minus, that is debtors. Discount on creditors, it is opposite, PLCR plus and liability minus, it is called as what actually? Creditors, right? So these are the maximum adjustment that you can expect at the first PUC level, right, for final statements. Say the last topic that I would like to get you, accounts from incomplete records. Single entry system of bookkeeping, meaning it is called one way of keeping records. It is usually concentrate on cash book and personal account, that is debtors and creditors, and forgets to record expenses or losses, incomes or gains, that is nominal accounts. Say you have all actually learnt American system of bookkeeping, but here I am going to get you that one, that is very very important. That means you are going to concentrate only on liabilities, right? You are going to calculate only on cash items, that is there in what actually single entry, but you will forget your expenses and what actually incomes. That is why it is called as one way of keeping records. It is not full. That is why we will calculate from last to first, which is called as single entry system of bookkeeping. So statement of affairs we prepare, or the other way, it is prepared to find out capital either opening or closing. Sometimes or both, you can say that, or both. So you are going to prepare combined statement of affairs. You are going to find out both opening capital and what actually closing capital. It is like a balance sheet, but not a balance sheet, right? It is prepared on the basis of accounting equation, asset minus liability is equal to capital. So I have given you opening asset minus opening liability is equal to opening capital. That is also called as opening statement of affairs. Now in the similar fashion, closing assets minus closing liability is equal to closing capital, which is called as closing statement of affairs, right? Then what are the final accounts that we prepare? Final accounts of incomplete system is statement of affairs, statement of profit or loss, then revised closing statement of affairs. So if you can remember these things, I have not given anything about computers, because you know about computers. You are all youngsters, you are more well versed with computers when compared to me. So for that sake I have not given. I hope you can read, right? If you like this one, then I'll be very happy, so that I have done my best to see that the first year PUC students, they are going to get the best marks in your final exams. I wish all of my students that have the best luck, and let Goddess Sharda get you everything in your examination hall, so everybody you score 100 out of 100. Then once again I request those who have not subscribed for this channel, please subscribe and encourage the Educator Guru channel. Thank you. All the best.